Good morning, everybody, and welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to the Morning Vol Report. And what a morning is. A Trade of the Week Apple calls. I still like this idea. We're going to look at it in our, if I can get, there we go. We will definitely look at it in our chat room today. We have a tale of two markets. Q's down 0.5% again. For some reason, I guess it's the end of Google globalization. I'm not quite sure. But again, the market's still picking winners and losers. The squeeze in Goldman Sachs, I have to say, is nothing short of phenomenal. Google in the same way. Volatility now getting to places that, just take a look. So the stocks, Google, I think, is down almost $70 from the highs in earnings. Not much really has changed underlying except perception. Realized vol, sky high. Great trading opportunity if you own some gamma. We had kind of an idea like this in the strategy that will probably start to unwind a little bit today, depending on how far down we actually go. But you're starting to look at volatility that you just don't normally see. And this is, again, it's coming from the rubber band being stretched. How far it goes, I have no idea. Google has performed pretty well this year overall. Where we were in January, it was up a whole $100 or so, which is nothing to sneeze at. You're kind of getting about back to, that little break city hang. We're not there yet, but we're definitely getting back to the pre-earnings and where they had just two really big earnings beats. So we will look for something at Google as well as Goldman Sachs. Again, you're seeing similar things, but stocks going in opposite directions, right? This is just, it is what it is. It's an unbelievable squeeze. You see most of it in all the banks, even Bank of America. So all of a sudden, I don't know if banks coming out of the cloud of the current regulatory regime, apparently that's what it is. There's rumors. I think at some point I'm going to look for some sort of ratio put-back spreads or something like that. We're going to look at that in our chat room just because either the momentum continues. So it's a kind of either you got a continued momentum trade or you have a crash. And I don't think the crash is that big. I just think the crash or the pullback might be a little buying opportunity. But this stuff is causing volatility. Overall, though, it's flat for the S&P 500. This VIX is a pretty solid weekend markup. It's not going to surprise me to see the VIX 14 by the end of today if this keeps up. Because I think it is all I say is it is an orderly rotation out of stuff everybody loved into stuff that people other loved. It has, there's none of the big debt problems or the strange funk that accompanies huge volatility at this point. It's just there's a change in what people want. It's simple as that. How long that goes on, I don't know. We are starting to see a little bit of pullback now in VIX that's real. Again, pre-election, post-election, not quite amazingly. This was right before the Hillary email, I think. Okay, or that second, whatever the second investigation was. It's clear what day that was. When things just started to turn around real fast. Here we sit. I'd like to see 30-day volatility break 90. Okay, these are just some numbers we look at. Do they mean anything? They do mean something, right? December volatility, 87. Again, volatility in VIX should always be lower as you move out in time. What you want to start seeing is this fall is still actually pretty high for the week. And I think part of the reason why is this 15 straddle for this week is priced at $1.30. And the reality is if we don't really move a little more, if we don't get more real movement, VIX could be 13, and that's a $2 straddle. So this is actually one of the few times I think how VIX is trading where there is potential for vol to come in pretty hard, almost more so than just pop. Now, any overnight news can make volatility go up, but as of right now, there's a bid for the 13.5 put in VIX expiring in 2 days. You don't see that normally, but they want it. As far as vol products go, just take a look at VXX. I think this really is a function of how the futures are hanging in the term structure we have. It's not a lot of VXX. We have we've dropped just into contango. Almost. VIX monthly is still over the November future. So at least short term, there's expectation that VIX drops. Again, how fast and how far is going to depend on how, you've got bonds being sold off pretty hard. You have gold being sold off pretty hard. You have dollars going out of those, it seems, and into everything that nobody wanted before, like commodities and financials. And it's enough to keep some volatility up. It doesn't look like panic volatility, though. Not even. It doesn't. At least not now. You've got with the no monthly future expiring in a couple days, starting to drift lower. Okay, that's a big. At least it's a slight tell. We're looking for lower vol for this week. Again, Thanksgiving's next week. By Wednesday, all the vol products are going to be concentrated in December 16/21. If we have a 13 vol for a VIX close, if we do get that low, we could see the vol products could become a really nice trade going into the holidays for a downside trade. It's not quite there yet, right? Because the reason is because the decay is so light, really, for the products for the most part. They mostly just have a tendency just to hang. So for VXX, I don't expect it until we actually see some real VIX fall. It's going to kind of hang around here a little bit. We have very few volatility product positions on in our strategy ladder. Mostly VXX, we're down like a one lot, I think. It's just there's not a lot to expect out of it. So when I don't see a lot to expect, I don't have a lot on. However, I still look at maybe the market vol can come off. Only thing that's keeping the vol up, and it's still substantial, is the unwind. The unwind of gold, the unwind of treasuries, and the flip into financials, commodities, heavy machinery, all kinds of stocks like that. And where it stops, nobody knows, to be honest. So we will look at all kinds of plays. However, what that has been doing, as a hint, is it is locking up the S&P 500. Right? If you're out of one index and into another, it makes SPX flat. So iron condors, I think, for this cycle start to look good. We'll price one right away this morning. We'll look for flies as well. We'll look for daily trades. Just take what the market's giving you. It seems to be moving really. Individual names and sectors are moving hard, but the SPX is not. NDX is probably still a little bit woolly to get next to, at least for right now. And with that, I will see many of you in our chat room shortly.